prices will probably go up and unemployment will go up. That implies that the rich get richer, and the poor don't benefit. The poor, the ones below the median income level, inflation's going up faster than their income, so their real income is going down. The Fed created an enormous income inequality, you see. Monetary policy was not neutral. When they goosed it, it was non-neutral, and it benefited the rich tremendously.
2026 is going to be a pivotal year. Inflation is returning, the unemployment rate is likely going to surge, and the misery index, which our next guest tracks, is likely going to go up for the U.S. and possibly other countries around the world as well. We're going to find out what that means and which assets will survive in this condition with Steve Hanke, professor of applied economics at Johns Hopkins University. This video is sponsored by Kalshi. It is a fully regulated platform that lets you trade on real-world events, from economic data to political outcomes. Traders can put money down on their favorite teams, events, elections, and more in all 50 states, including California and Texas, and over 140 countries. Go to Kalshi and use the code LIN, L-I-N, link down below, or scan the QR code here, and new users will get $10 off on their first $100 deposit. That's LIN, L-I-N. Professor, welcome back. Good to see you.
Great to see you, David. And a Happy New Year.
Happy New Year. Merry Christmas to you. Yeah. Let's talk about, the economy. I stumbled upon this video clip of a new Keanu Reeves movie that I believe is either out or coming out recently. I can't remember, but it's called Good Fortune. And I haven't seen the movie, but I have seen this one particular clip I wanted to show you and get your reaction to. I think it resonates with a lot of people right now in the economy.
Felipe, there's something wrong with my check.
What's wrong with your check, Abe?
There's not enough money. Where's the money? They're paying one number and then taking a lot of money for all these other things.
Let me see, Gabe. This money goes to the local government, federal government, your insurance, and your social security. That's why it's less money.
I can't make enough money to live off this.
You may need to get another job.
Another job? I wash dishes all the time. When can I do another job?
I don't know. I have 3 jobs.
What?
I work here, I'm a mechanic, and I do a valet parking at an escape room.
I thought a job gives me enough money for all my things and some extra money to spend on fun stuff.
Sorry, Gabe. This is how it is.
All right. Okay. He's going through hard times. So how do we know the unemployment numbers don't really tell the full story? Maybe people aren't employed but are in that gentleman's situation. And more generally speaking, let's talk about the living standards in America.
Well, I think this thing does get at the heart of the affordability issue, and that seems to have legs. And the reason that it has legs, and it's going to be very difficult for Trump to deal with, is that there's something called the money illusion. And the money illusion is that when people go in and they look at the sticker price on something, that sinks into their head, and they never adjust things for how much money they're actually making. So let's say the price of something goes up by 10% in the year and your income goes up by 20%. Well, actually, it's more affordable for you. But that's not the way you see it, because you see the 10% rise in the sticker price, but you don't do a calculation of, I'm actually making 20% more, so who cares if the price of whatever it is goes up by 10%? I'm actually better off because my real spending power or affordability is things are more affordable because my wage went up faster than the inflation went up. So that's the money illusion. The money illusion is you don't look at the income increase that you've had over a time period. You only look at the price increase. And normally, if prices don't go up too much, it's not a big deal, But if prices have gone up a lot since COVID, and people go in and they see the sticker and they have sticker shock. And they have the money illusion thing working. The sticker shock stays with them because they don't make this adjustment to what's happened to their income over the relevant period of time. So I think I think this is an issue. I think Trump will have a terrible time explaining it because who's going to get out in the weeds and say, well, how much has your income gone up relative to the price of eggs? The only thing people care about is the price of eggs.
That's fair enough. But Trump.
I think this will be a continuing big issue. And remember, as long as inflation is going up and you don't have deflation, by definition, the price index is always at an all-time high. It's always going up, and it's always at an all-time high.
We also have to consider the fact that someone working 2 to 3 jobs, needs to do that to survive. I mean, I don't know of anybody personally who loves 3 jobs. Maybe they do. I'm not sure. So
yeah, well, let's go back to the early 1960s when I was a student at the University of Colorado. I had 3 jobs all the time. I had 3 jobs when I was in high school most of the time. And what did I do? I saved a lot of money. And what did I do the first year after I graduated from college? What did I do with the money? I bought an apartment complex with 24 apartments in it.
That's what you do. An entire complex with your savings right after college?
Yeah, exactly. I did.
How's that possible, Professor?
Work 3 jobs, do a lot of overtime, and save, and you can and know the right banker, which I did.
Okay, fair enough. But that raises a good point. Back in those days, you could buy a house with 1 job. You could buy an entire apartment complex apparently with 3 jobs. Nowadays, you're working 3 jobs, you can barely get by. Yeah, this is an issue, but since the clip you ran was talking about 3 jobs, and you were whining around about 3 jobs. I thought it was great that I had 3 jobs. Plus, I was going to school full time. So I had 4 jobs actually because I was a student trying to avoid flunking out of the university and graduating. But the point I'm making is somebody working 2 to 3 jobs, they're employed. They're not in the unemployment numbers. But is there a way we can gauge whether or not the total workforce is pretty much happy with where they are? Or do we have a lot of people who feel like they're underpaid or underemployed, for example? How do we check the underemployed statistics?
I think the main thing is that you're getting people have a little bit of a sour taste in their mouth. I'm not talking about the upper above the median income, but if you have below median income, there's a lot of growling. And if you look at Trump's polling numbers on the economy, they're bad. Why are they bad? It's because of all this affordability thing, and the affordability thing kicks in because I don't have the statistics on the top of my head, David. But the average age, the median age of first-time home buyers is gone up. You're a lot older before you buy your first home. Now that means it suggests that you don't have the money to buy your own home, right? That's the way I'd look at it. If I see that, and I think now the number is something like the first purchase of a home. I think the median age it's up in the over 30 years of age. I think it's around the mid or maybe late 30s, and that's a very big increase in the last, let's say, 20 or 30 years.
So to sum up, what is your outlook on the state of the standard of living in the U.S. into 2026, factoring in inflation, which is going to eat away at purchasing power if it goes up a lot, and also factoring in wages and the labor market overall? So we have to have relatively good or as close to full employment as possible for growth to maximize, and also we have to have real wages going up. And that's the nominal wage minus the inflation wage rate that I mentioned.
To make a forecast like this, let me tell you what's the most accurate way to make these kinds of forecasts is to say what's going to happen in 2026 will replicate what happened in 2025. So the first knee-jerk reaction, without getting out in the weeds and boring everybody watching us, is that that's the best and most accurate way to forecast the economy. What happened this year will happen next year. And what does that mean? Given what we've been talking about, it means that you're going to have a lot of growling and a lot of unhappy people around, which isn't going to be very good for Trump. Because Trump, he's a great salesman. There's no question about that. But I don't think he's going to be able to bamboozle his way out of this affordability thing, as I indicated before, because of the money illusion and the fact that prices will, by definition, be at all-time highs in 2026. They were at all-time highs in 2025, and inflation will continue, maybe get a little worse, in my view, because the money supply is starting to accelerate. And that means that we'll have prices at all-time highs in 2026.
Yes, speaking of, people should watch.
By the way, you can take that to the bank. The CPI price index will be at an all-time high at the end of 2026. Take it to the bank. It's 100%.
Wait, what do you mean all-time high?
Just what I said. Think about it. People get confused about these things. You have a price index, a consumer price index. It has over 300 items in it. And as long as there's inflation, that index is going up. Even if the inflation was 1% a year, the index is going up. So it's always at an all-time high.
Oh, I see what you mean.
The only way it cannot be is if you get periods of deflation where you have negative prices like occurred in China during 2025, for example. There were times when the price index in China, the consumer price index, was not at an all-time high. It peaked out.
I thought you were talking about the rate of change, the inflation rate at all-time highs. No.
Rate of change, but
okay.
if you read the press, David, you will find a lot of the press. They love spectacular headlines, so they will say the price index in India is at an all-time high. Well, of course it is. It's always at an all-time high, unless you have deflation. But the newspaper, the headline writers don't understand any of this, and they get things screwed up often. And the narrative, the important thing is, what is the narrative? And now the narrative is affordability. That is the narrative. And I don't think Trump is going to be able to shake that one.
Well, let's take a look at, I don't think we've talked about this too much last time because it just happened. So Powell announcing reserve management purchases. Take a listen.
Accordingly, at today's meeting, the committee decided to initiate purchases of shorter-term Treasury securities, mainly Treasury bills, for the sole purpose of maintaining an ample supply of reserves over time. Such increases in our securities holdings ensure that the federal funds rate remains within its target range and are necessary because the growth of the economy leads to rising demand over time for our liabilities, including currency and reserves. As detailed in a statement released today by the Federal Reserve Bank of New York, reserve management purchases will amount to $40 billion in the first month and may remain elevated for a few months to alleviate expected near-term pressures in money markets. Thereafter, we expect the size of reserve management purchases to decline, though the actual pace will depend on market conditions. In our implementation framework, an ample supply of reserves means that the federal funds rate and other short-term interest rates are primarily controlled by the setting of our administered rates rather than day-to-day.
I'll end it here. He cited this is necessary for the growth of the economy, and with the growing economy comes growing demand for treasuries, which is why he's purchasing $40 billion a month worth of treasuries already started 2 weeks ago. What will this mean for interest rates? What will this mean for inflation? Professor?
Well, this is a little bit part of my concern, because in this month, today's December 22nd, 2025, and quantitative tightening was stopped this month. Now that's the shrinking of the Fed's balance sheet. Now, what did he just say? He indicated that it depends, of course, what they do with the long dated securities, but it looks like they've switched from quantitative tightening to quantitative easing. Now, that means that there'll be an increase in the growth rate in the money supply from where it would have been if they had not purchased these 40 billion per month dollops of T-bills. Now, that is a concern of mine. Another concern of mine is the fact that they keep lowering the Fed funds rate. Another concern is that in April, the bank supplemental liquidity ratio will be dropped, and that'll give the banks a lot more firepower to make more loans, which increases the money supply. So you take all of these things together, and what do you have? You have an acceleration in the growth rate in the money supply. And if you have an acceleration in the growth in the money supply, you're not going to get the inflation genie back in the bottle. So my 2026 moving ahead, remember in 2025, I said, well, inflation would fall. Well,
yes,
it actually did fall. Even, of course, thanks to this kind of anomalous phony number that we got for the November inflation number. And that was one in which the inflation rate, headline inflation, went from 3% down to 2.7%. But that was really because the government was shut down. October, they didn't measure prices. They only started measuring again in middle of November. So, but at any rate, be that as it may, the inflation tended to slowly come down in 2025. I think it'll probably slowly go up in 2026. And that gets into our narrative about affordability. It's the narrative that counts. That's what we're getting into. We're not getting into drilling down into the weeds to find out about this thing or that thing. What is the narrative? What's going to be driving things? And I think the big narrative will be, hey, inflation is really not under control, and hey, we've got an affordability problem. Everybody's complaining. And politically, what that means is that these polling numbers will remain, I think, negative on Trump and the economy, because the labor market is weak and unemployment will probably go up in 2006. So prices will probably go up and unemployment will go up. Now, in Hanke's misery index, when you calculate a misery index, those are two important variables: the rate of inflation and the rate of unemployment. You add those two things together, and that gives you a simple misery index. That's the one that Art Oaken developed originally, by the way. The original misery index was developed by Arthur Oaken, a very distinguished economist who was one of Johnson's economic advisors on the Council of Economic Advisors. And Art Oaken, Johnson kept saying to Oaken, God, you give me all this complicated stuff, like David Lynn gets on the program and he wants to know this thing and that thing, and I'm out in the weeds and I don't understand. What's it all mean? So Oaken came up with the misery index, and the misery index, he just added the rate of inflation and rate of unemployment, and he handed it to Johnson every month, and he says, that's the misery index. That's all you need to know.
What does the higher misery index for the U.S. imply for assets, investable assets and securities?
Could be higher. That's what happened after COVID. And what does that imply? That implies that the rich get richer, and the poor don't benefit. The poor, the ones below the median income level, inflation's going up faster than their income, so their real income is going down. They got big affordability problems. They got sticker shock and all that stuff. But the guys who have assets, land, real estate, stocks, they come out ahead. Remember, in January of 2020, before COVID and before the Fed accelerated the money supply, the billionaire's wealth as a percent of GDP was 14.1%. COVID came, the money supply surged. Following that, as we know, asset prices went up. The stock market went up, real estate went up, commodities went up. Everybody who owned assets made out like bandits, and now the billionaire's wealth as a percent of GDP is 22.7%. So the Fed created an enormous income inequality, you see. Monetary policy was not neutral. When they goosed it, it was non-neutral, and it benefited the rich tremendously.
I'd like to talk more about what income inequality, what rising income inequality is going to mean for policy going forward, whether or not we're going to see more socialist policies in place because people are going to demand it, how Trump is going to respond to this. Let's save that for the new year. I want to jump back into markets now. Silver and gold hitting new all-time highs again as we speak on the 22nd of December. Silver now at $69 an ounce. Almost at $70 at one point. So this is unprecedented, of course, and with gold at $4,400, almost $4,500. There just doesn't seem to be an end to this. And interestingly, the inflation number that we haven't talked about yet, we haven't talked about the last CPI print. It went down, actually, not up. So I wonder what silver and gold are responding to, but I'll let you comment.
Well, they realized that last print was an anomalous thing because of the government shutdown during October into the first half of November. So the number, the 3% was the number before the last print, which is 2.7. Mm-hmm. And you can't compare those. It's like it's an apples and oranges problem, David. Just to keep so people understand, there are two numbers. They're both indicating inflation numbers, but they're measured in completely different ways, and you really can't compare them. So the silver and gold market realize that they're making new highs. Actually, now I've gotten into silver too. One of my old pals from Iowa told me he had a ton of silver and asked me what to do with it. And I said, well, I don't know. I haven't really looked at it. Once I started looking at the market, I got entered a little over 38 and I've been happy about that. But what's going on? You said, we don't know when this is going to end. Well, I think I've told you on this program, I think gold will peak out somewhere around $6,000 an ounce. So it's got a ways to go. If it's close to 4,500, it's still got a ways to go before it gets up to $6,000. So that's one thing, and that thing is pulling silver up. But silver in the last month has gone parabolic. It's gone up a lot more rapidly than gold, and I think what's going on there. Part of this is a China story, by the way. The last country to go off the silver standard in the 30s was what? It was China. The people don't realize the Chinese, they love the white metal. And now the Chinese are restricting exports of silver. And so they're basically hoarding it. And the demand, all these commodities, by the way, they're all connected with the elephant in the room. And the elephant in the room is China. China is the elephant in the room. And so I think silver is going to go up along with gold. I'm not surprised. And what's going on with silver? There's another factor going on, and I think the reason that it did go parabolic and surpass the rate of increase in the price of gold was the fact that now there's kind of a currency component that's being worked into silver. And remember, historically, it's been mainly viewed as just an industrial commodity. There's not much moneyness priced into silver, but I think that's changing a little bit. And I think that's adding a little juice to the little fuel to the fire in silver.
Two more topics I want to cover with you before we end the discussion: dollarization and Venezuela. Starting with, well, not dollars, the outlook for the dollar. That's what I meant to say. De-dollarization, USD index yearly low this year. This is from Cauchy Prediction Markets, which I know you follow. People are, or traders are expecting the forecast to be 107.7 to be the yearly low this year. Anyway, I like to get your comment on what will drive the dollar into next year. Remember, we've also got the Japanese yen story that we've been talking about, and with the new prime minister announcing even more spending, and Japan expected to. By the way, this is countries expected to go into recession before 2027. Traders have predicted Japan to be the highest country outside the U.S. at 51% chance of going into recession before 2027. I wonder how fiscal policy in Japan in particular, and perhaps other countries, will impact the dollar, if at all.
Japan's a little bit of a basket case, because the money supply for 30 years has been growing way below Hanke's golden growth rate, a rate consistent with hitting Japan's inflation target of 2%. So their monetary policy, they've had a very tight monetary policy squeeze for decades, and so that's one factor. The other little secret, if you go back at least the last 10 years, you've had essentially no growth in productivity in Japan. It's got the worst record of the G7 countries in terms of productivity is in Japan. It's zero. It hasn't changed at all. So you've got very low productivity. You've got an ultra tight monetary policy, and I think the new prime minister simply doesn't know what she's talking about. So you've got a very bad policy mix. The one thing in that chart that you have up there, they forgot Germany. Germany's already in the tank, and they don't even have it up there.
Yeah, it's already there. People aren't really trading on Germany. I guess. Okay, so
and the United Kingdom, that's in the tank too. The United Kingdom's trying to wage a war with Russia, and the place is a mess. China.
What do you mean, wage a war with Russia?
Well, like they're in war with Russia. They want to continue. They want a war with Russia. They're Russia-phobes. The Brits are Russia-phobes. Why do you think Europe is so adamant about engaging in a proxy war with Russia and keeping the war in Ukraine going? They want to keep the war going. They don't want a peace deal. And the leadership of that, it's coming from the UK and, of all things, now Germany. Germany and the UK definitely, they don't want a peace agreement. They want a war.
Okay.
So let's jump to China, because let's talk about a real country. Let's talk about China.
All right.
China's the real deal, and China has a nominal GDP target. Nominal GDP includes a real growth term, and that's 5%. The Communist Party comes out with a transparent target, 5%. Their inflation target is 2%. Add them together, and that's 7% target for nominal GDP growth. And they're just never going to make it, because the growth rate in the money supply is lower than Hanke's golden growth rate, a rate consistent with hitting a 2% inflation target. And of course, they essentially have no inflation in China. The last read on inflation was 0.7%. It has been negative. The last read was 0.7%, less than 1% year over year growth rate in the CPI. So it's less than half of the target rate. So I think they're going to have a terrible time reaching that nominal. They never will reach the nominal, and I don't think they'll reach the real, and they'll go into in effect a de facto recession.
Speaking of
So
war,
I agree with the betting market.
Okay. Speaking of war, this is happening in. We'll come back to global recessions next session. This is happening in Venezuela. U.S. forces stopped a second oil tanker off the coast of Venezuela. As you know, there's an ongoing blockade around Venezuela that Trump announced just last week. Actually, he ordered a blockade of all sanctioned oil tankers entering and leaving Venezuela. He said that for the theft of our assets and many other reasons, including terrorism, drug smuggling, and human trafficking, the Venezuelan regime has been designated a foreign terrorist organization. Therefore, today, I am ordering a total and complete blockade of all sanctioned oil tankers going into and out of Venezuela. And the clip that I have on the screen that we just watched is one such oil tanker being flagged by the U.S. Navy, which, by the way, Trump said is going to be or is currently the largest armada that South America has ever seen. There's some second order effects, which we can talk about, including now Cuba is suffering from this. But before we talk about any other country, let's talk about Venezuela first. What is going on here? And will this blockade actually achieve the desired effect that Trump at least is announcing, which is helping with fighting terrorism and drug smuggling, among other things?
Okay, so most of these rationales are, shall we say, questionable. I won't use the word phony, but they're very questionable, debatable, and so forth and so on. What's going on is that the U.S. wants a regime change, and the U.S. most people don't realize these are like acts of war. These regime change things, and since World War II, we've engaged in over 100 attempts at regime change. The United States. This is a very, very common practice. What do you think the CIA does? I mean, these guys are in there trying to overturn whoever they don't like. They try to get rid of them and do a regime change. Most of these don't work. Number one, and have had basically catastrophic consequences, both in the country where the regime change is attempted, and a lot of collateral damage and so forth. So I'm an anti-regime change kind of guy. And the reason why is that the evidence is it just doesn't work. End of story. Forget about the principle of the whole thing. And the principle is bad, but the fact is they don't work. So that's the end of that story. Now, what's going on down there? They're actually chasing. You said they had 2 tankers that they had boarded. They're chasing
so far.
a third.
Yeah,
They're chasing a third one December 22nd. They haven't gotten it yet, but they're chasing it. And we have 25% of the U.S. Navy is down there in the Caribbean now. This is big time. Mm. Venezuela is attacking us. They're somehow a threat to the United States, and we have 25% of our Navy down there. I mean, this is a little bit of, quite frankly, a joke. But
how much of this is about the U.S. wanting Venezuela's oil?
That's one of the rationales brought up too. But who knows? When you get into oil, which is something I know something about in Venezuela, I was President Caldera's chief economic advisor in 1995 and 1996 in Venezuela. And if you look at PDVSA, that's the state-owned oil company, they are depleting the world's largest reserves of oil are Venezuela. It's not Saudi Arabia. The world's number one is Venezuela in terms of reserves. They're depleting those, PDVSA is depleting those at 0.1% per year. So to deplete half of the reserves, it would take at least 400 years to do that. Now, that means waiting that long to pull up a barrel of oil and selling it with time preference and any kind of positive interest rate, you know that the reserves, if you have to wait that long to get them out of the ground and sell them, they're essentially worthless. So the way the thing is being exploited now, the reserves of the world's largest reserves are essentially worthless. Now, compare that to something like Exxon, which, by the way, did used to operate in Venezuela. They don't now, thanks to the Venezuelan government. But their rate of depletion of their reserves is about 8% a year, which is very typical of the majors. And as you can see, the reserves that Exxon has, they have a positive value because they're exploiting them, fairly rapidly. So that's the scene that you have with the oil reserves. The other thing that's important to realize is the difference between sanctions and blockades. Sanctions have a history of never working. They create a rally around the flag effect and keep somebody in power that you're targeting. So you don't have a regime change. If you don't want a regime change, the best way to get it is with sanctions. So we sanctioned Venezuela. We have Maduro in power for 12 years. What's he done? He's wrecked the economy. The current inflation rate, which I measure every day, is 642% a year, David. That's the world's highest inflation rate, 642% per year in Venezuela. They also had two hyperinflations with Maduro in 2018 and 2020 that I measured, and those were inflation rates over 50% per month. So normally with a hyperinflation, whoever is the leader is toast. They're out of there. Why did Maduro stay? He stayed because the U.S. stupidly sanctioned Venezuela, and you had a huge rally around the flag effect, and Maduro has support.
Yeah,
now,
this is, by the way, happening in Venezuela. They're burning.
Now going to the blockade. The blockades are a different kettle of fish. Blockades do tend to work. So we'll have to wait and see.
We'll have to wait and see. And I want to show you something, Professor. This is supposedly in Venezuela. We have, I'm not really sure what's going on here, but people are just throwing bills around.
Yeah, those are worthless bolivars. If inflation's running at 642% a month, those bolivars, they're protesting.
And we have here the blockade impacting neighboring countries. Cubans are going hungry, according to the Wall Street Journal, suffering from spreading disease and sleeping outdoors with no electricity to power fans through the sweltering nights. A quarter of the population has fled during the island's most prolonged economic crisis. It's about to get worse. The U.S. is ratcheting up pressure on Havana's key benefactor, Venezuelan strongman Maduro's regime, which has kept the communist-ruled nation afloat with cheap oil. How is a blockade around Venezuela creating an economic crisis in Cuba?
Because the bulk of the oil coming out of Venezuela, it ends up being transshipped through Cuba. Cuba keeps a little of it. 85% of it actually goes to China. As I said before, when it comes to commodities, China is the elephant in the room. Cuba is a little minor footnote in the thing. They take a few barrels, but the key thing keeping Cuba afloat is sanctions on Cuba. Why do you think the Communist Party has been in power in Cuba for all these years? Because we sanctioned Castro and we sanctioned the Communist Party in Cuba. That is evidence of the failure of sanctions. They don't work. Why do you think Maduro is still in power in Venezuela? It's because of sanctions. Sanctions are stupid. anyone who has read the literature and looks at the empirical evidence would know the stupidity of sanctions.
Let's finish off here. What's next for Venezuela? We don't know yet. I mean, it's still early in the blockade, but how do you see this playing out?
We don't know. So far, everything has failed to create a regime change in Venezuela, and we've been trying to do it. The CIA has been working full time on this since 1999.
Let's see what happens into 2026. Thank you very much, Professor. Wishing you and your family a Merry Christmas, Happy Holiday season, and we'll see you in 2026.
David, the same to you and your mother. Great to be with you, and see you soon, hopefully in early January 2026.
Yes. Yeah. See you in the new year, to a bright and prosperous new year to all. So we'll see you in a couple of weeks. Where can we find you, by the way, right now? Where can we follow you?
Follow me on X at Steve_Hanke. We're running it now with 816,600 followers. So everything's going okay. By the way, one little footnote: I do measure the inflation rate in Cuba. I'm the only one who accurately measures that every day. It's 36% per year and going up.
Okay. A day, you said?
No,
36%.
I measure it every day. The year-on-year rate.
Oh, year-on-year. Okay, sorry. Okay, got
36%. It's way lower than Venezuela, which is 642% per year.
Okay, so high, but still not hyperinflating.
Yeah, but it is going up now. By the way, that picture you showed with those bolivars, what they're protesting, that's affordability. They have an affordability problem.
Yeah, for sure. Well, hopefully we don't see that here in the U.S. where people start throwing dollar bills around out of protest.
Anyway, that's why you should have gold and silver. You can't throw that around.
Thank you once again. We appreciate you, Professor Hanke, and have a happy new year to you as well. Don't forget to subscribe and write to us and let us know which questions and topics you'd like us to cover for the new year when Professor Hanke comes back in January. And don't forget to follow Professor Hanke in the links down below and use my code LIN, L-I-N, when you use Cauchy. Link down below or scan the QR code here and you'll get $10 on your first $100 deposit.